You can avoid 100% of your income taxes every single year. We call this strategy the paper loss strategy. In order to use it every single year, you have to understand the rules. The very first thing that I'm gonna need you to understand is you're gonna need to buy an investment property. When you buy a rental property, it could be an Airbnb or it can be a long-term rental. But as soon as you purchase the property, I want you to write off everything that's on the inside of the property. This could be appliances, bathrooms, tubs, cabinets. And when you write off everything that's inside of the property, it creates a big expense. We call this the cost segregation study. Once you do the cost segregation study, it creates a big enough loss to offset your W-2, your 1099, your stock, and your crypto income, making you tax-free. Comment below if you'll be investing in real estate to avoid W-2 and 1099 income taxes.
Okay, so this is not correct. First off, you have to be a real estate professional in order for this to work out. Now, let's say you have just a regular business and you have a lot of items that you can deduct and that you can expense. This also doesn't work out in that situation either. Now, it will work out for the first year, and that's the kicker. These strategies of zero income only work out for year one. They don't work out for year 2, 3, 4, and all the way down the line. Plus, it doesn't take into account all of the expenses that you're putting in. It's like saying I'm going to save a bunch of money by spending a bunch of money. It doesn't really work out that way, right? So say you expense all of these things and you have a large loss on your balance sheet. Let's just say that you own a business and it works out all right. It makes it so that you don't have income taxes that year. It's all expensed. Well, what happens the next year? You've already expensed all of those items that you've purchased, and now you don't have items to expense. So are you gonna buy more items? Now you're putting in, buy $100,000 worth of items just to get a $30,000 tax savings. It's not good for your business. It's not a good strategy for the long run. It's an okay strategy for year one, but if you look long term, it is very ineffective. The best thing to do for taxes is to run your business, run your income in a healthy financial way, right? So if you're buying real estate, it might be really helpful to buy that real estate and have people renting from you. Or if you have a business, it might be really helpful to buy the assets that you need. But then make sure that it's something that you actually need and you're not just doing it for tax purposes. If you like this video, please like and subscribe. Check out my channel for more. Thanks.